So, all right now, let's move on. So, where did you stop? How come you- kò ní show? Like, kò ní. That's why you have to off the lights. That's why. Oh, okay, 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 okay. Uh, okay, okay. Uh, where did you stop, please? Where did you stop? I can't remember. Okay, yes. I was given that there are other words, important rules to identify a wavy structure. Yes. So number one, a wave 5 sometimes does not move what beyond the end of wave 3. The situation is called truncation, fail swing, or loss of momentum. Oh, don't worry, leave it. My brother, leave it. We will just continue.
If I break am, I just see pips buy am.
Get with me.
Okay, cool.
Now, number two, wave 5 sometimes goes beyond or break through the trend line connecting the what? The end of wave 3 and 5. Do we remember this? Let's start again from the beginning. I said there are other important rules you need to identify the wave structure. And one of it is that wave 5 sometimes does not move beyond the end of wave 3. That is when you have failed swing, truncation, or loss of momentum. Then number two of it is that wave 5 sometimes goes beyond or break through the trend line connecting the end of wave 3 and wave 5. For example, if you draw your trend line now, your channel, so the channel that connects the end of wave 3 and that is expected to connect wave 5. Do you remember how we draw our channel? Sometimes it can sail beyond it, not respecting that line. It will what? It will break beyond it. That is what it. That is what it means here. So that was where that was what we have. That was why we have this. Oh, I've cleared it. Now, wave 1, wave 2, wave 3, wave 4. You are supposed to have wave 5, right? But you draw your trend line connecting this resistance now. That if wave 5 come, it should respect it. But in a situation it now breaks beyond it. It tells you that there is a rule that guides that particular wave. Do you get it now? That sometimes it can break through the trend line connecting the wave 3, the end of that wave 3 and wave 5. Are you following? Now, so the next rule, gold is seriously buying. Now, number 3, Now, manual. That's Sarah manual. Now, number three, wave three tends to be very long. Tends to be what? Very long, sharp, and extended. I've said this before now, right? And extended. Which I told you that sometimes it could be wave 5 that will be the extension. Is that not so? Yes. So that is for number three. So number four, which is the last one, wave two, wave two and four, wave two and four frequently respect your Fibonacci retracement or your Fib retracement level. Do you get it now? I don't know. Is it understood? You know that wave two is acting as a retracement. And for you to know the end of that retracement, you place your what Fibonacci from the beginning of that impulsive movement to the end to know where that retracement will end for you to not take the next impulsive movement. So wave two and wave four frequently what respects your Fib retracement levels. So what are the Fib retracement levels you have? Eh?
That's
From the beginning. I want you to start from the beginning. What are the Fib retracement levels you have? We have one, which is the end point of an uptrend situation. Then you have what? 23.6. That is your first level. The second level, point what? 2. Yes, you have to know these things off though. Number 3, 50.0. Yes. Then the fourth one is 1.8. Then the last one. Eh? 76.4. That is the last one. Do you get it now? You have to know these levels. So you are expecting that this market come down to the average ratio of 50% and 61.8. Not that other levels will not respect or react, but it is expected that you are looking at what 50 to 61.8 as the average retracement level point. Are you getting it now? All right. So these are the words. These are the other important rules you need to understand. It is very clear, very clear. Now, knowing this will now take us further to the three-wave pattern. Exactly. Yes, this will take us further to the three-wave pattern. You say? So can I take this off? We now know our five wave pattern now, right? Now, Elliott's wave theory made us to understand that we have what, 5 to 3 wave pattern. Is that not so? And it has to go in a cycle like that for you to get what, market movement, or to know, for you to know what, price action. So we've known that for us to get our five wave, we have our what, 1, 2, 3, 4, 5, in which 1, 3, and 5 is the motive in an uptrend situation to the upside. Then 2 and 4 is our retracement. And once your 1, 2, 3, 4, 5 is complete, you are expected to have a what, a three wave pattern afterwards. So what does that three wave pattern comprises of? That is what we want to know. Now please listen. Now the three wave pattern, the three wave pattern, please listen attentively. The three what, wave pattern is a corrective movement of your, or of the, whatever the case could be, five way structure. Are you following? So the three wave pattern is a corrective movement. That is, it is a retracement movement of this what, five wave structure or five wave pattern, whatever. Do you get it now? Mhm. Comma, it tends to move contrary, it tends to move what, contrary from the five wave structure. It tends to move what, contrary from the what, five wave structure. Now, knowing this make us to understand that for us to have our three wave pattern, it must be after a what, a five wave pattern has formed. It won't stand alone, no. It has to be after a what, five wave pattern has what, has formed. And it is a corrective movement, that is a retracement movement of your what, of your five wave pattern. Now, instead of us using 1, 2, 3, 4, 5, because it's not 5, it is just 3, we make use of what, alphabet, to recognize the movement, to recognize the what, the movement. Using A, B, C. So the first part of this wave pattern will be for A. The second part of this wave pattern will be for B. The third wave of this three-wave pattern will be for what? C. That will be the identification after a five-wave pattern has been formed. After a five-wave pattern has been formed, great. Now, this will now lead us to how does this three-wave pattern forms? How is it being structured for us as a trader to identify them? Now, there are more than 25 or more than 21 types of this three-wave pattern, the way it forms. But for us to now properly recognize them, we have three major. And within these three major, you can be able to see any two the other ones out of it. So it's not necessary you start looking out for how those 21 looks like, but there's a what three major at which this three-wave pattern forms after a five-wave pattern. So this will now lead us to what? Types, the three types of corrective wave pattern. Don't forget, three-wave pattern is your corrective pattern. Is that not so? Corrective pattern of what? Wave. God bless you. So now types of the corrective wave pattern. Number one, we have the zigzag formation. Zigzag formation. We know what zigzag is. Do you get it now? That is the first formation we have for your corrective pattern. Number two, we have the flat formation. Don't forget, I told you that it is up to 21, but it is basically what? Three. This three, just know them effectively. Know this three effectively. It is very important. Number three, we have the triangle formation. Now, you see this three, the zigzag formation, the flat formation, and the triangle formation. Take note of these three. It is very important. And these formations are what? Are your three wave corrective pattern after your five wave pattern has been formed. So how does a zigzag formation forms in the chart? Please follow. Now, the zigzag formation. Now look at this. If the market is moving in an uptrend situation now, wave one, wave two, wave three, wave four, wave five, and we are being told that we have a what? A zigzag formation. And we are told that we have a what? A zigzag formation. A zigzag formation. After the fifth wave has been placed, boom, how does a zigzag look like? So you are expecting that the movement of this market from here goes like this, and like this. So this is what? 1, 2, 3, 4, 5. So your zigzag formation correcting this whole 5 pattern is this A, this middle B, and this guy C. So how does a zigzag look like? Is that not so? Do you get it now? If it is for a downtrend too, it will be the same thing. Market is coming all the way down. Wave 1, wave 2, wave 3, wave 4, wave 5. So how will your zigzag be? Eh? A, B, and C. Do you see it now? Zigzag. So 1, 2, 3, 4, 5. So this is your what? This is your A. This guy is your what? B. And this is your what? C. Did you get it now? Now, there are some things you need to take note in this your zigzag formation. Now, zigzag formation are very step moves in price that goes against the predominant trend. Your predominant trend is the what? Is the uptrend now. So don't forget, we said our three-wave pattern moves as a what? As a counter trend to the what? To the initial trend, correcting it now to like 50% now. Is that not so? Is this market going up? Okay. Eventually, this will go. All right. So the zigzag formation can happen. Okay, now this is it. When you look at the zigzag formation, your A and B to C have their own what? Length. In other words, your B formation of your zigzag is always what? Shorter. But the A and C is what? Longer. Within that zigzag formation, you will still see a fractal of your what? Of your 5-wave pattern. That is, this will be your what? Wave 1, wave 2, wave 3, wave 4, wave 5 inside. Then the B will be the correction of this guy, A, B, C. Then it will now come down again, wave 1, wave 2, wave 3, wave 4, wave 5. For a correction on a bigger what? 5-wave pattern. Don't worry, you will understand. Okay, you get it. That's great. So do we get it now? That is why we treated fractals in the beginning, to tell you that fractals are what? Are smaller pieces of a what? Of a bigger picture. All right. Now, the second one is that we have a what? We have the flat formation. We have the what? The flat formation. Now, the flat formation are simply the flat formation are what? Are simply sideway corrective wave. Are you following? Corrective wave. That is that is the length of each formation are equal to each other. Are you following? Are equal to what? To each other. Okay. So how does it form? It forms in this way: A, B, and C. Did you get it now? This is A, this is what? B, and this is what? C. And market now. Continue. Do you get it now? A, B, and C. So in a situation you have an uptrend, market is coming up, wave one, wave one, wave two, wave three, wave four, wave five. Once you have wave five, you have A, B, C. Do you get it now? One, two, three, four, five. This is the fifth one. Then the corrective wave: A, B, C. They are equal. They are simply sideway. You can see sideway corrective wave that has the length that the length of each other are the what? Are the same. So that is why it's called what? The flat formation. Do you get it now? Now the last one is what? The triangle formation. The triangle formation. Yeah. You say? Yes. Once it finishes A, B, C, the next one continues to the upside. Yes, the M pattern will not count because even if you see this M, it's at the what? At the neckline. Is that not so? Uh-huh. All right. So, boom. Do we get this? Are we following, guys? Now, the triangle what? The triangle formation. Triangle formation are corrective pattern that are made up of 5 waves that move against the trend in a sideways fashion. Now, the triangle formation are what? Are corrective pattern that moves in what? Or that are made up of that are made up of 5 wave 5 wave pattern that are made up of what? Five wave pattern that moves against that move against the trend. That moves against the what? The trend. Now, this triangle can be symmetrical. This triangle can be what? Symmetrical, comma, descending, comma, ascending, comma, or it can be what? Expanding. And I gave you the shape of this. It's still on the group. Oh. In case you don't you forgotten, it's still on the group. You can get it on the group. All right. So let's move on. So don't forget, I said we have a 3-wave formation. Is that not so? And that 3-wave formation goes alongside with zigzag, and it goes alongside with flat formation. But the triangle formation is also 3, but it has what added 2 to it to make it a corrective wave 2. So how does it forms? It forms this way. You have your what? Now the triangle formation, you have your what? A, right? B, right? C. It was supposed to end like this, but because of it wants to form a triangle formation, it gives you your what? Your D and E before it now continues the what? The movement to the upside. So where is your triangle? Are you seeing it now? So this is A, this is what? B, this is what? C, this is what? D, and this one is what? E. So whenever your triangle forms, you can be able to use this as a basis of calculation to know where the breakout will happen. So for example, on this GBP USD, boom. Don't forget, we saw a what? a symmetrical triangle at this point. Why is it off now? Okay, so let's construct it again. Here to this point. Now let's calculate this triangle before the breakout. So market is coming all the way down. Yes. Market. So let's use this as an example, the triangle. All right. Now, what triangle is this? Symmetry. And the symmetric triangle is make us to understand that we are to have what? A, B, C, D, E in between before any breakout happens. Now, where is your A? From here to this point, that is your A movement. Is that not so? From here to here is your what? B. From here to here is your what? C. From here to here is your what? E. After A, B, C, D, E has formed, you are expecting a what? A breakout. So if you are able to catch this as your, now see this, we don't know what is happening in the future yet, and we are seeing this as our as our symmetrical triangle. Has it completed the correction? It has not, because what we are getting is what? A, B, and C. What of D and E? Because what the wave state is that it must be what? It must be A, B, C, D, E within a triangle consolidation. So if you are just getting only A, B, and C, and a breakout now happen to the upside on that side, it could be a fake breakout because it must complete the what? The 5 wave. Are you following, please? Now, you are now seeing this as your what? From here to here as your what? A. From this point to this one as your what? B. From this point to this point as your C. So that is, there is most likely, hypothetically, that movement come down to form your what? D. Do you get it now? Which will be at this point. Do you see it now? So imagine your market was like this initially. You will be seeing this guy as your what? As your breakout, and now enter a buy. Whereas you still have A, B, C. D and E has not formed yet. You are not getting it, guys. You are getting it, right? Exactly. So A, B, C. Now C did like this, boom, 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 breakout from this guy. But no, the breakout, it's not valid yet, because the rule of your 5-wave theory, sorry, the rule of your 3-wave theory states that for your consolidation to happen as a correction, it has to be what? A, B, C, D, E. But what you are seeing is just A, B, C. So you are expecting a what? A D, and you are still expecting a what? E. Before anything now happen, either to the downside or to the upside. So any breakout that happened before your E is a what? Is most likely to be a false breakout, and the consolidation process will still continue. So that is how you can effectively know a consolidation period. Are you following, guys? Then after it has formed A, B, C, D, E, then a breakout now put to the downside, boom, enter a sell. It has agreed after the consolidation has finished. Are you following? Now, A, B, C, D, this is E. Now after the E, breakout. The E did not get to this guy, but it's fine. It is also what? E. Don't forget, I told you that you will not accurately see what you are learning on the chart. Is it? Wait, there's even, let me get it here. Now, guys, can you see this? Elliott impulse wave 1, 2, 3, 4, 5. Elliott's correction wave ABC. Now for the triangle ABCDE, do you see it? Everything is available here. Now what Elliott's triangle wave? This. Now I've picked it from here to here. A. Do you see it now? From here to here. B. Do you see it now? From here to here. C. From here to here. D. Then from here to here. E. Guys, are you getting this, guys? Are you following? Do you know this now, right? Hello? Hello? Are you please, are we following? Is it simple? You say? If it comes to this place, no problem. E. It does not. Yes. So every consolidation within a triangle must be up to AB within a triangle. Yes, within a triangle. Let's find another triangle. Now this I'm seeing another triangle here. Now, Elliott wave from here to here, A, from here to here, B, from here to here, C, from here to here, D, from here to here, E. So whatever happens here, a breakout. Are you following, guys? You must definitely see A to E as your correction. So this correction or consolidation is for which movement?
Yes.
1, 2, 3, 4, 5. A, B, C, D, E. Are you guys seeing it now? 1, 2, 3, 4, 5. Then your correction A, B, C, D, E. Then a breakout happened after that. Which goes alongside with what we've been explaining since, that the Elliott wave theory move in what? Where is the point of 5 to 3? No, no, this is not here. Okay. Now, do you see now? If a market is to trend, market moves in what we call a what? 5-3 wave pattern. Do you get it now? 5-3 wave pattern. It will definitely, after it has given you your 5 pattern, it will give you your correction pattern, in which we talk about our what? Correction pattern as what? Zigzag formation, the flat formation, and the triangle formation. So, which now further explain that for you to have a zigzag formation, this will be your what? A, B, C. Do you get it now? So if you have your wave 1, wave 2, wave 3, wave 4, wave 5, your next correction will be what? A, B, C in a zigzag form, which tells you that if you are to have your flat formation, which is your 3 pattern, it is simply what? A corrective wave that has the same length for each what? For each formation. which is what? A, B, C. Do you see they are equal? And this is how it looks like. Wave 1, wave 2, wave 3, wave 4, wave 5. A, B, C. Equal. So you can do this one in a rectangle. Then the third one is that you have what? Your triangle formation. Now the triangle formation, you know we said that it is a three-wave correction. But your triangle formation now have what? Added 2 to the 3. For us to now have what? D and E. A, B, C, D, and E. So they are now corrective wave pattern that move in what? 5 waves. 5 waves are what? A, B, C, D, E. Not 1, 2, 3, 4, 5. Do you get it now? For your correction. Are you confused?
That's the same way we have ABC.
Okay.
We have
Uh-huh.
no correcting good matter.
So the corrective wave for your zigzag is 3. For your flat is 3.
But for triangle,
For triangle it is 3 too, but it has what? Added 2, making it 5. Which you are not going to call 1, 2, 3, 4, 5. A, B, C. Just add D and E to it because they are correction. All right. A, B, C, D, and E. But that, wherever the breakout happens, which most likely it is to the upside, if it is a symmetrical triangle. You know, after I've told you guys now, we've treated symmetrical triangle, descending triangle, all those triangle. Yes. Ó padà ní.
that triangle will take time. Take time.
You said?
Triangle they have to find.
That's why you need to practice. That's why you need to practice. So you need to practice for you to discover it. You can't run away from practicing. So if you are just depending on the teaching here,
How can you practice? You have to start waiting for practice and practice and practice.
it's both. You practice based on backtesting. You also practice based on the current price. So you will sit on it till those formation you are able to discover it.
I get
Okay. Okay. I also get work now. I'm a musician. So are we getting it, please? No matter any triangle that you can discover, it must be A, B, C, D, E. See this now.
This is one.
So what kind of triangle is this?
This one is
Expanding. Expanded triangle. So so from here,
yes.
A, B, C, D, E. F that.
No, you are right.
A, B, C, D, E. Are we because this is a movement. Which one? This one here. And now this is the movement of the upside A. So A starts from here. A. Then B come all the way down here. C, D, E. This is where A is supposed to start from. A. Do you get now? A. Market is coming all the way from here. Boom. And it started A. Do you get it now? Then B. Then C. Then D. What am I doing now? From here. A. Then B.
This one, that's green. That first.
I don't scatter am.
That's a matter of
You don't. So market went all the way. Then A. This one from here is A. From here to here is B. From here to here is C. From here to here is D. From here to here is E.
So when you, that's not flag.
No, we've not gotten it. Oh, wait, oh,
It's not flag.
wait.
So the triangle.
From here, market went all the way up to this point, right? So from here to here is A. From this point to this point is A. From this point to this point is B. From this point to this point is C. Ah, D. No, wait. Something is wrong. No. I'm not. No, this is it. This is the triangle.
So that's why Elliott.
This is the triangle. I got it before. And Sister Franca did. So market went all the way up. Boom, boom, boom. Then when it gets up, then from here to here is A. From here to here is B.
Now you better.
From here to here is C. From here to here is D. From here to here is what? E.
Maybe the triangle was done too far.
Do you get it now? Then this one. Eh? That which one?
But this one stops here. It stops when we outside. Or counter backwards. E,
Wait.
D, C, D,
A, B, C, D, E. Am I confuse me now? A, B, A, B, C. No. A, B. From here to here is A. From here to here is B. From here to here is C. From here to here is D. From here to here is E. So from boom market to A. Eh? This one here. This one is what? A. Then from this A down here is what? B. From this B up to this one is what? C. From this point up to this one is what? D. From this point up to this point is E. So this zero is telling you that market is moving from somewhere here up to this up. Do we get it now? A, B, C, D, E.
So how come
Eh?
I don't know some of these ABC as the corrective ones?
They are ranging now.
But
So
this not the more range. It's not from the strength.
no, it can either range either symmetrically, it can range either triangle, it can range either rectangle. You understand? Your own is that you make sure you do what? You capture it once you discover it. Let's look for another one, sir. Yes. Hey, this thing don shoot up. Ah! Oh.
Anything, maybe beer. Beer. This is drinking beer.
Yeah. I enter with small lot size now. That I'm done.
You never trade. You go tell someone you no overtrade.
It's not over trading.
You never trade. You know something. Because when you say you say for 0 1 because you 1.0.
It's a promotion as well.
So no, you can't be only the one enjoying it now. You can't be only the one enjoying it.
Because some people who are there won't know.
Yes, now. Just give them signal as well. I know this one is not.
You know what to say about that. So if you use one of those, you know.
This market is going up. No, this one is for, this one is not, it's my own small account. That one I told you. Yeah.
You said they want more account.
Yeah.
No, it's good though. One for house. No, my phone. One for woman.
Ah,
One for
ah, ah.
yes.
One for babes, right? Oh, God. All right. Praise the Lord, somebody. So, are we getting it? Yeah. So, whatever triangle you can discover, A, B, C, D, E must definitely happen. Now, this is another triangle.
That's the one.
Now, flag. This is how flag looks like. Flag, we have, now look at it. Flag, we have this to show you that a market is, if it is a bullish flag, it will have this straight line to tell you that market is coming, to tell the market is coming up, right? Then you will now have market movement from here consolidating in a downtrend. So that is what I'm supposed to do. You take your parallel channel, do you not see? How does it look like? I know. Now, now look at, there was a time I discovered a flag on 4 hour time frame on gold, and I posted it to the group. Now, do you see it now? See this? This is the pole, right? Are, are you following? Ah, you expect a main straight. So if it's straight, market go dey go straight like this. Market no go straight now. Now I dey try give you the pole, say na the movement, na the pole movement be that. If you no get, you no understand wetin. This is what I'm trying to say. If you do like this,
Market can never go.
market cannot go straight like this. It's not possible. Market does not go straight like this. It will not. It can never go straight.
No, she just want you.
Oh, why did you? Now why did you want?
Why you know say
No, the one the one
Now look at this. From here up to this point is a what? Is the pole. Even though you do it like this to this place, it's still fine. At least this is the pole. Right, Abi? Exactly. But me, I will bring it. This is the pole. If you want to hold the flag, how do you hold the flag? You can hold it like this. You can hold it like this. So then where is now the flag? This is it.
Yeah, I think I look at that first.
I was looking at this from
Me
here
too.
to this place.
No.
No, because this is down trend now.
So God bless you. You can see your flag too like that. See, you are very much correct though. That is a what? Falling wedge.
Falling word, yes. That is what that is what that falling word. Can use that as a channel as well. Can use that as a channel.
No, it is no. Flag does not look like this. Flag looks like a what? Like like a channel. Exactly.
That we convert it to channel.
Yes, you can actually do it to channel now. You can convert it to channel. But it will not.
No, wait.
But see, did it come down to this place? No. But where did it get to? It got to 50% of this guy and respected and went all the way up. Do you get it now? Exactly. Now let's count our Elliott wave from year to year. A, Abi. From here to this point, B. from here. So I told you that you will not see it exactly the same.
But that one dey clear.
But did he touch this guy? It na the one wey touch the the resistance and the support. Na him you go count na. Yes, now no, na so e be now. From here, it touch this place, A. From here, it touch this place, abi. B. From here, it touch this place, C. D. E. Yes, e no reach. Yes, now. Let's start it again. From here to here, A. You will not see it perfectly. It's not. You can never see it perfectly.
You get F. You get no one for us. I sure if no one does, F is CPD.
No, F no dey o, abeg o.
Everybody calculate now. Everybody calculate. Just like international. I don't know say for 270.
Ma? Ah! Ah! Omo, dis thing just dey buy dey go. Collect your. Ah! Ah! 8. Oh, I'm done for the day.
When I reach now, I just like 5 hours.
No, na so the thing dey.
Now, so from here to here, A, right? From here to here. From here to here, A. From here to here, B.
These are C.
From here to here. From here to here, E. Before the breakout now happen. Do you get it now? So if you check this, you should follow your what? My God. With what? 0. What? 0.01 is making $35.
Oh, is that one now? No, it's that one. Oh, what will happen now?
That's what will happen now if it is real account. It is the same thing. It is the same thing. Why will you say, so what have you been learning here since? No, now. So, it's the same thing. I am saying that it is the what?
Yes.
Now, from here to here.
Even to put the other person on the
See, if you continue to say that it's not the same, you will not be confident in your trading. See, you just for you to be confident in making trade, you have to be certain of whatever gain you are making. That even if it is demo, you are seeing it as your life account, because you are starting with $100, and you are applying every bit of the knowledge you've acquired. So if you are saying it's not the same, if you now enter real account, you will misbehave, or you will go out in a trade that should give you more profit. What you should be saying that it works. You have to be positive. So it is the same thing. Did we not analyze all these things together? We analyzed it together. Did it not play out?
Yeah.
And what is it?
I just left it.
Yeah. Sorry, sir.
Of course, this is the one they sent from the. Yes. It's yesterday. This was yesterday.
Yes, now. There are some people that do leave it now.
I'm telling you.
Sometimes I do leave my trade though. Once I break even. Now with this now, you can break even. Yes, now. So you bring your loss to the point of your profit and leave it. So whatever happens, yes. So
Let me get my.
where are you supposed to put your break even now?
No, you see that.
Where are you supposed to put your break even? Where are you supposed to move your stop loss to now?
Let me see.
Eh? No. Okay. Now, This is it. This is your
This
stop
is my
loss.
stop loss, yes.
So now you are now in profit.
Yes.
So
Let me-
and you are
let me
in
do
massive profit. Where are you supposed to bring your stop loss to? To which point?
At least to this somewhere around here.
So that God bless you. That was what I explained. Now, if you have to put your stop loss, you have to put your stop loss at your what?
Close
Now,
to the-
higher high,
Mm,
higher low.
yes,
The
that
next higher high is happening. So you are supposed to put your stop loss at this point, this level.
That's it.
If
I was even thinking.
so, it's not possible. Yeah, this is the
That's my
current price.
stop price. No, that's my TP. That's
This is
my
your
TP.
TP, and
Yes.
it's almost close to your
Yes,
TP.
well, yes.
Anything that make the market close below this liquidity here, that is your higher low. It has changed structure. Do you get it now? So what will you do? Take your trend line, and you don't have to. Okay,
I have.
take your trend line.
That's trend line.
Take your trend line, connect it from this place to this place. So this is the trend line that is getting this uptrend. So bring your stop loss, you put it below this guy. Whatever make this market come all the way down, it will break this trend line and come below. So what is the price? What is the price? 3330. So you are bringing your stop loss to 3330. That is it. You will see it there. Shebi, this is MT5. You will see it there. Okay. Oh yeah, do it. Go to trade. Okay. Hold. Modify. 3330. Your stop loss. 3330. Mhm.
I don't need it.
Yes. Okay, modify. Boom. It has done. Oh yeah, go and check it. Chat. Do you see it now? Where is it?
That come up now. Look at it.
Now this is your stop
This is
loss.
my stop
Yeah.
loss.
Oh yeah, clear. Oh, click it and know the price.
There's the price at
Yeah.
3330.
No, click it to know how much. Just hold it. Just touch it. Just touch that line.
Which line?
Just touch it. Touch the line. So how much?
Okay.
How much is this?
This is 21.64.
So once it comes back, it will stop you out with $21.64. But currently you are in what, $35. That is break even now. Of course, if you hit TP, now check the price of your TP. Touch it. Just how much will it give you?
That's for the
$8. If you hit your TP, $48. That is it now. That is how it works. Trading is simple. Trading is simple. Yes. Eh? Eh. Okay, okay. Yes. Guys, let's move on.
That's what we don't know. That's what we don't know. Anyhow, yes, ma'am. Yes. No, look at what he did. What he did. Mr. Mike, what he did was when he started, he didn't go. He didn't go. As in, what's runish? What did bomb? How did he do now? That shot guy. He said that he uses his free money in trading instead of being what support practicing with them. That they lost back. That they lost at so much. Yes, ma'am. That's why God bless you. Yeah, it's different from the demo. That's a demo different. It's very film well. It's not different from demo.
You two, guys, look at this now.
Because no practice well before enter. That's what he's saying.
Can we see this?
This one brings up.
Can you see what are we having now? God bless you. If and we have 90 more minutes to go for this guy to close above this guy. Once it ends and close above it, people of God, this is where we are coming to. because the height of this guy, we get to this point, that is this liquidity 3375, and after he takes out this liquidity and close above it, the next liquidity is coming to is this place, but we have a zone here, so it will test here too, probably it's now do a fake out and come back.
What is this measure?
uh-uh. You know what we used to measure it now.
I know what is the measure?
Measure this high, this length, yes.
I don't understand.
This length. This length.
Uh,
What makes you to use it from here?
yes, now from here, this is the neckline now. From this
Okay,
side,
W. I don't know.
yes, I'm talking of W
Oh,
pattern.
sorry.
Okay, you now not see the W pattern.
Let's go to the
Ah,
yeah.
have you seen it now? And this white, this
Yes, yes,
is the neckline. Are you seeing it now? Neckline. Now, once this neckline closes, we have how many more minutes to go? 17 minutes. If it closes like this as a full maribozu, it is going to the next zone at this place. Yes, buying to the upside. The key is there. Okay, the key is with you. Oh, okay. Are you going? All right, guys, are we following? So analysis is very, very, very important. Yes, now, see, we are seeing results now. Is that not so? We are seeing. It's just left for us to be confident. And now, please, because you guys need to start practicing. Please, so don't make excuse that you have work you are doing, you will not be able to practice effectively or lengthy. Please don't say that. Oh, once you are done with whatever you are doing, you will definitely have your what, your time to practice.
But they are training when they are able to say the train is free, that's another point.
You say?
When they are able to when they are able to be confident with the train, tell me that they will train now.
So this is the last week of the trading now.
Say
So probably we will just use next week to learn risk management, effect, because we've not done risk management. And we will, then probably next week it will not be more of practicals, just for that one. But I will have to talk with the admin first. Did you bring it?
everybody brought now.
Probably we will do it tomorrow then. You know, because of this Elliott wave, and we are not even done. Please, let's continue. Now we understand this Elliott wave theory now. Wave one now, great. How can you now use the combination of this Elliott wave theory for your analysis? Now, so we've not done the practical. We've not done. Now what we want to do now is the what, is the real-time analysis. See how good is flying now. Real-time analysis of this guy. Okay. Now, guys, let's come back to this. Look at this. Markets, where is the starting point of this particular trend? This is how you calculate your Elliott wave theory. Where is the starting point of this particular uptrend? This one. So this is what? Higher high, higher low. which happens to be what? Wave 1, wave 2. Once you have wave 1, wave 2 rule, one of the rule of your Elliott wave that wave 2 must not come below this guy. So that is it is correct. And we have market going all the way up. Great. So what will you now do? You take your what? Your channel. We are combining everything together to the upside. So we have a what? Our uptrend channel. Guys, please follow. So boom, we have our what? From year to year wave 1, from year to year wave 2, from year to year wave 3, from year to year wave 4, from year to year wave 5. Do you see that now? Now look at our motive wave. In our motive wave, which one is the extended and the longest? Now look at this. If I should draw my trend line at this point, at this rejection point, did wave 3 extended out of this?
Yes.
Is it part of the rule? Do you get it now? Sometimes it extends, sometimes it does not. Do you get it now? But most of the time, wave 3 is your what? Is the longest, sharpest, and the most extended wave out of your motive waves. Are you following? Now that you have wave 1, wave 2, wave 3, wave 4, wave 5, you are expected to have what? A retracement. After, so who can show me the retracement here? Of this movement, of your 5-wave movement. A, B, C. What type of retracement is that? What type of correction is that?
That's zigzag.
Do you get it now? From year to year, A. From year to year, B. From year to year, C. So it is expected that once we are done, which means that your A, B, and C is a correctional wave for which wave? 1, 2, 3, 4, 5. So what will you do in combination with other analysis? You take your Fibonacci 2 from this point to the highest point to know where the retracement of your A, B, C will get to. You can see that your A got to what? 38.2. The B, it respected your 38.2 level, acting as a support to go up to your what? 23.6 level. Abi? You know that I removed my 23.6, yes. So the 23.6 level is now acting as a resistance for your what? For your B to now continue your C all the way down. So your C all the way down, boom, come in between what? Your 50 to 61.8 fib level for your next what? Impulsive movement to start to the upside, which is your what? 1, 2, 3, 4, 5. Now we are done with this. We are done with this. This one has broken out. We've analyzed everything. This is A, B, C. Now, if this is A, B, C, we are expected to have the next wave, right? So from here to here is what? Wave 1. From here to here is what? Wave 2. Wave 2 must not come below wave 1. Now, from here to here is what? Wave 3. Wave 3 is currently happening. Do you get it now? So wave 3 here, wave 4 can be what? Here, then wave 5 to the upside. Yes?
Yeah, because that is okay, this one? Yes. This one? This one is higher than this.
I have mentioned it over and over again. You will not see markets perfectly giving you higher like this. It's not possible.
Yeah, let's try.
From this place
Yes,
to this place. And now it got there now. And it is a retracement. Now see this. It retraced that be from year to year. It retraced to the point. You enter a bike to take it to what? Minus 0.27. Is that not so? Wait now. Wait. From year to year, it respected and it went up to minus 0.20. Is that not so? Now, if you delete this and you take your channel from this point to this point, this is what you'll be having. Is that not so? Did it break out from this channel? Now, if it break out from this channel, what will you do? You take your Fibonacci from this point to this point to know where this retracement will get to for you to buy further. I don't know if you follow. So if it buys further, see what happened here. Boom. So if you take your channel and you do it like this, so what will be your where will be your wave one? Where will be your wave two? From this place to this place is wave one. From this place to this place is wave two. From this place and currently going up is what? Wave three. What you are looking for, you are looking what you are looking out for. I know you made a point, but you are looking out for perfection. You know it's what you are looking out for. You will not see it perfectly. And now that is what I'm saying. Now, all right, see this now. No, wait. This is what we are seeing, right? Is that not so? This is what we are seeing. Come down to lower time frame. Can you see the calculation of your wave? Can you see the calculation of your wave? From year to year, wave one. Right? From year to down to this place, wave two. From year to year, wave three. Is that not so? From year to year, wave four. From year to year is what? Wave five. You now have your what? Retracement from here. A, B, C. Is that not so?
But
now this
what he was saying
this
this is what he was saying to
mm,
okay, now this.
now wave one, wave two, wave three, wave four, wave five. And what did I tell you about your overall wave? That every 1, 2, 3, 4, 5 is your what? One impulsive. Now come to higher time frame. That is why we have fractures. Now see your wave one, wave two, wave three, wave four, wave five. Wave five is short. Is that not so? Do you get it now? Now imagine if you are now seeing this as retracement. If you are seeing this as your retracement, it is a retracement for your what? Complete one impulsive movement. That's why we treated fractures. That's why I come to smaller time frame so you can be able to see the wave. Now come to 4-hour time frame. Did you see it now on 4-hour time frame? So this on 4-hour time frame, how are you seeing this? From year to year is what? Complete one. But on smaller time frame, that complete one is our what? That complete one is our what? 1, 2, 3, 4, 5. That is what we are saying the same thing. Now, if you come to 30 minutes time frame, it's still the same thing. 1, 2, 3, 4, 5. Come to 1 hour. 1, 2, 3, 4, 5. But you will not be seeing it glaring like that, like you come to a lower time frame. Do you see this now? So 1, 2, 3, 4, 5. A, B, C. Is that not what we calculated? No, now. Say, okay, wait, let's start again from the beginning. This was what this is where we started, right? This was where we started. No, it is here now. Let's come to 1 hour time frame. Look at now. Have you forgotten, guys? It was this was the zone we started with now. This is the starting point now. Have you forgotten it? From here, wave 1, wave 2, wave 3, wave 4, wave 5. That I was telling you that wave, which one is the extended one? You said wave 3. Oh yeah, come to 4 hour time frame. When you come to 4 hour time frame, did you see it? Come to 1 hour. 1 hour, yeah. This is what you are seeing, yeah. This is what you are seeing here. 1, 2, 3. But come to 4 hour. 4 hour. Did you see? Look at it. It is straight line. Do you see any any red line? That's what I'm saying. On your higher time frame, eh, you will see a complete O. But when you come to lower time frame, you start seeing fractures. So that is why I calculated this. God bless you. If it's confusing, you come to yes now. That is it. Do you get it now? So 1, 2, 3, 4, 5. Then your correction A, B, C. Then once ABC finishes, what happened? From here to here, 1, 2, 3 is currently happening, right? Then 4 is expected not to come to the price range of what wave 1, even to the extent of coming below this guy. So wave 4, then wave 5 can now either be a what? Equal high, giving us our first theory pattern, either zigzag, either what? Flat or triangle. So if it's going to be a triangle, what will happen here? Wave 5. So triangle will now start happening from here. B, C. Oh, sorry, this is not triangle. This is for flat. Let me delete this. After the 5 has formed, then A, B, C, D, E. Do you see it now? That is how it happens to triangle. Boom, boom, boom. Wherever the breakout now happens, it will now continue again. 1, 2, 3, 4, 5. And that is how market moves. Is it confusing? No, it's not. Don't worry. That is not. Is it confusing? Yes or no? Rewatch the video again for you to understand much more better. Because knowing your Elliott wave theory is what is subjective. This W, it's very sweet. 1 hour. Let's see 1 hour. 8, 9, 8, 7, 6, 5, 4, 3, 2, 1. 1 hour has broke. We are going up. So yes, anything will happen. Probably it retrace down or it enter. Be rest assured that this thing is still coming up. See the neckline now. Whatever retracement you are seeing happening is just retracing. At the end of the day, it's going up. It did not close above this zone, but it has closed above your formation. The neckline. Where's the neckline of this formation? This is the neckline. 1 hour have closed above it now. So even though it's still within the zone, it's not maybe it is retesting. It's not maybe. So at the end of the day, even though if this retest is to happen, what will happen? Take your Fibonacci.
Is it Fibonacci or measurement?
Take the Fibonacci from year to year. Wherever this retracement is coming to, it will come to each of those levels. Minus, it will come to 0.32. You know that one is not there, but at least it will still come down to this one, 38.2. Respect it, go up the way up. No, you're not waiting for any 1 hour again. As it is like this, market is going up.
It's going up. Go and check out a smaller time frame.
And so it might likely retrace down inside this place. Sometimes I told you that market can either retrace or move up aggressively. I've mentioned it before.
In the smaller time frame, I will not see this way.
No, you see it now. You see it now. So what will be the channel of this guy to trail this upward movement? This is it. So now look at this. Settings. Where's my 23.6? Oh, I don't come out and put 0.7. 23.6. Is it 23.6? Help me to confirm. 0.236, Abi. Where is it? 0.236. Am I correct? Exactly. Do you see? Market has currently gotten to what? Do you see it now? It has gotten to that point now. It might respect it or break it. And now you see the same thing. Currently it's retesting. You see, it's moving up now. Do you see it now? It's going. Do you see it now?
Exactly.
Now it has finished now. On 1 hour. 1 hour has finished as a breakout now. Boom. Right? So once you
This one that is coming now is another 1 hour.
The previous one is the breakout now.
Yes.
Now this one is the current one.
Which is just starting.
Yes. Yes, now this green is the breakout. See your W pattern. Where's the neckline now?
No, it's down that breakout. Forgotten.
Now, wait.
Now, after the 1 hour, close now. It's not bringing me.
Where's your neckline? Where's your neckline? This is your neckline. Now, where's the breakout of this neckline? This green. God bless you. Then this red that is happening. What is happening? It's the retest. I told you that. What did I say when we started this? I said that when a breakout happens, market can either move out aggressively or it retests. And what did I tell you for entries? If you are to enter this kind of trade, you can enter with what? You can enter with small lot size. Do you understand? And if it retests, you enter with your, and after the retest happens and you get another confirmation. Now, if this 15 minutes candle now end as a bullish pin bar, you now enter your complete one. It's still the same thing. If that is what if it's that you want to wait, it's fine. So you are a conservative trader. That's good. It's a good one. Do you get it now? If this one ends now, another 10 minutes, or if it finishes as red, let's check it as 1 minute. One minute. What candlestick pattern is this? Do you see now? This is bullish engulfing. Do you get it now? On 5 minutes, what do we have? There's a rejection, but no proper. Do you get it now? That is on 5 minutes. But on 15 minutes, we are still waiting. This could finish as a red candle, and the next green could end as a bullish engulfing. You enter. But there's already a confirmation here that the neckline of your W pattern has broken. So it is expected that this movement of the market is coming here, where is coming to this first liquidity here to take out this liquidity, and once you take this buy side liquidity, the next liquidity is coming to is here. But within those movements, there are what, there are barriers. So exactly. Eh, eh. Now your stop loss will now be below this guy, this liquidity here now. Yes, for those that entered aggressively. Now 15 minutes, do you see this? Boom. Now do you see this bullish engulfing? Now this bullish engulfing, your stop loss will be below. Yes, your stop loss will be below, and your entry will be around where this market is trading now. Exactly. So your setup, this is your setup. This is your setup. This is your setup. So with this, it can be able to give you idea of where your entry point is, where your stop loss is, and where you are aiming as your take profit. This is a setup like this. Do you get it now? You say? So your TP1 will be at this 0. Your TP2 will be here. Your TP3 will now be at this zone, within this zone. Are you following, guys? So that is it. Yes, we are done. So we will continue our experiment on, yes, on the Elliott wave theory tomorrow.